The forex market never sleeps, and neither do I. So let's go and see what the charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis on this channel. So make sure that you subscribe, and I will see you on the charts. Today, I will be speaking about EURUSD as usual, first from a technical perspective, then also from an order flow perspective. So to see what hedge funds are doing in the market. And by the end of the video, we will try to understand where we have the highest probabilities for a potential move here on the pair. And before we start analysis, one quick thing. We just started the Black Friday month promotion. Not only the price of the mentorship program has decreased a lot, but you also have the possibility to get a full refund of the program cost directly on your trading account, since we have basically partnered with a forex broker for this promotion. So basically, you pay for the mentorship program at a very discounted price, and you get that money credited from them directly on your trading account. For all the details of this promotion, you find everything on the website. Doesn't get any better than this. You find all the details below as usual in the description. So let's start the analysis. Starting here on the monthly time frame, what we can see is that the market has just started a quite strong impulse to the downside, and in creating this impulse, the market has also broken several structure levels. In fact, what we know is that this area was acting as previous monthly support here, against support here. The market broke it to the downside. At that point, all this previous support was turned resistance here. And what we can expect in a situation like this is for the market to go and retest this previous support and resistance and then start a rejection to the downside. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we can see two very important things. First of all, we can see that how the market has basically created an impulse and a correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we do that, what we can see is that the market here has just retraced exactly to the 0.382 golden ratio of the Fibonacci taken on this weekly impulse, which is a quite strong area of weekly resistance and supply that you do expect the market to test and reject to the downside. And in fact, we can see that so far that is exactly what the market has been doing. It tested this previous support and resistance, and at the moment is rejecting it to the downside, and we can expect more continuation to the downside. To be specific, if we want to try to identify a first support zone at which the market could stop and start another correction, all we have to do is look left. In fact, if we look left here, we can see how this zone was acting as quite strong previous weekly resistance here, and again resistance here, which now that the market has broken it to the upside is turned support here. So there is a good probability to see this market create a move to the downside to go and test the liquidity inside of this zone before then seeing a rejection to the upside, which means that we can expect still some bearish price action to develop and the market to create a lower low, breaking below the previous low that we are currently testing. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Dropping down on the daily time frame, what do we have? Now here in the daily, I had spoken about EURUSD a couple of times in the past. I spoke about EURUSD when the market was around this area. I made a full breakdown explaining all the reasons for which we expected this rejection to the downside, and that is what the market gave us. Then from here, I made another breakdown explaining all the reasons for which we expected the market to provide a rejection to the upside. And again, that is what the market gave us. And by the way, I will link these two previous analyses in description, so you can go and check them out for more free education. Now at the moment here on the daily time frame, we can see that after this fake move to the upside, the market melted very aggressively, meaning that this move to the upside was actually a stop hunting of all the stop losses that were above these highs. The market made the move to the upside, triggered all those stop losses. If you have basically a sell and you have a stop loss, the stop loss is simply a buy order, which creates the liquidity for hedge funds to actually short. And that is exactly what we have seen. Fake breakout to the upside, Triggering all the stop losses, the big players in the market had the possibility to fill in their positions, and the market melted quite aggressively. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing, we can see how lately we have a very negative net positioning of minus 12.1k net positions. In fact, we have 205.4k short positions and only 193k longs. So we have a massive amount of shorts compared to longs, negative net positioning. Definitely from a technical perspective, we have already seen that we expect more continuation to the downside. So everything seems quite bearish for EURUSD. Now, if we look at the structure here on the daily time frame, what we can see is that the previous daily support, which is now turn resistance, is exactly at this area. And after the creation of an impulse, what you expect is for the market to provide a correction to the previous support turned resistance to get more liquidity before then printing more continuation to the downside. So the way in which we will be approaching here this potential shorting opportunity on EURUSD with students is as usual being reactive and not predictive. If the market will successfully complete this impulse and then provide a correction, possibly to this previous support term resistance, inside of here, this is a quite interesting zone inside of which we could be looking for a potential short. So if we will get a completed impulse and obviously correction inside of here, what we will be doing with students is monitoring price action from an intraday perspective, so 4 hour and lower, because monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. So after a break on the retest of this previous support and resistance, we will be monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bullish market, as we will have, to an intraday bearish market, and only if the market will shift from an intraday bullish to an intraday bearish market and provide to us one of our valid entries at that point, we will be looking for a potential short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside, and for the market to possibly provide and create a lower low. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.